There we go. Let's try that again. There we go. Hey, guys. It's Keith Allen. Hope you had a great weekend. I certainly did. Celebrated my anniversary with my wife. Had a fantastic weekend. And now it's like, gosh, is this reckoning day or wrecking day? Might be more appropriate. Price action is ugly. No doubt about it, but I figured I needed to get this stream done before things changed again, right? I started writing this analysis like earlier today, and I've had to revise it a little bit just to update things as the price action has been developing. And I want to get into this before you panic. And there's certainly, if you're a bull, there's certainly reasons to be concerned and very attentive to what's happening. Lots of alpha in the charts here. So there's going to be something for everyone, and we're going to get into that in a second. But first, as per usual, do me a favor. And well, first of all, let me just welcome you, right? If you're new to the stream, my name's Keith Allen. It says it right there on the screen, so maybe I don't even have to tell you. But I'm glad to have you with me. I'm a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. And today, we are going to do another live stream here. We have live chat is open. I always encourage your participation and your engagement. It makes these so much better, makes it more fun for me, makes it more valuable for you. So by all means, don't be shy and get on in here. Eddie Gill. Yeah, red. There's a lot of red. So and hopefully your fingers aren't red from pushing buttons too much today. You really got to be positioned, and if you're not, I'm going to say, what am I going to say? I'm going to say that the market is in flux, and this price action really has unfolded as at least to a large degree as I thought it would. I talked about this last week. And so you should not be surprised. Some things came into play. I said, last week when fear and greed was at like 14, I said, yeah, 14 is that's extreme fear for sure, but I like it a lot better when we're in the 8 to 10 range. And we hit 10 both Saturday and Sunday. I also said I thought price was going to go to the yearly open and retest that Timescape level, which it did. I might as well go ahead and share that screen with you now so we can all be looking at and talking about the same thing. Let's go ahead and click this guy right here. So yeah, we talked about this yearly open in the Timescape. We tested that over the weekend. It looked good. I was pretty happy about that. We even reclaimed the trend line before the close. And then things got progressively uglier here this morning. So we're seeing obviously more downward pressure here. But we're going to talk about this because things aren't always what they seem. But right now, not going to lie, things seem pretty bearish. Hey, Michael, nice to have you with me. I appreciate you joining. And again, to anybody else, live chat is open. So if you've got questions, I will do my best to answer them. If you have comments or insight, by all means, please share them. We all learn together here. So we appreciate that. And if you would do me just one favor before we take the deep dive, if you haven't done so yet, smash the like button, hit the share button, and share it with somebody, one of your buddies who trades, or maybe if you're in a trading community, share it with your group and help me grow the channel. And do yourself a favor of hitting that subscribe button so you don't miss any of my future streams. All right, I crank these out several times a week, and quite frankly, there's no set time because I juggle a lot, right? So it's a matter of when I can get them out. And so today we're late in the afternoon, my time, but better late than never because you're going to want to pay attention to this. So bottom line, let's just get very basic here. If you haven't made any real decisions about your trades yet, this needs to move very high on your priority list because the market, like I said, is in flux, and we could be either in a at the beginning of a confirmed bear market, or we might be on another nasty shakeout before the next leg up. And I'm going to show you both scenarios. I'm going to show you the bullish case. I'm going to show you the bearish case. and let you decide what works for you. But I want you to plan. I don't, like I said, lots of alpha in these charts. I don't want you to just gravitate towards what feeds your bias. I want you to look at everything objectively, and I want you to have a plan for if the exact opposite of what your bias is aiming for. I want you to have a plan for if the exact opposite happens. You always have to have a plan for when price moves against you, and it is much better to make that plan when you are not in the heat of the moment, forced to make an emotional decision on the spot. I had some positions closed today in profit, right? I had a trailing stop loss moved way up. And I had some positions closed today, and yesterday for that matter, to lock in those profits because I just don't want to give it all back. I've given some back because of my conviction. But as I told you guys last week, don't get married to your bias. Don't get married to your conviction. Get married to the charts and the data. And that's going to tell you, that's going to guide your decisions. And if it's not, quite frankly, you're doing it wrong. And you may have some early success, but you will ultimately get wrecked if you pay more attention to narratives and so-called self-appointed gurus and influencers and all the bullshit that goes on social. Pay attention to the data. The data don't lie. Okay. Hey, Michael, I appreciate you sharing that in your communities. Thanks, man. I really greatly appreciate that. It helps me out a lot. So extreme fear, right? We talked about that with the fear and greed index. And I was referring to these levels down here, right? 10. Now, I would not be surprised if after today we see this drop lower and we get into that 8. We at least single digits, right? Maybe a 7, 8, 9. And if you look through history, there's not a lot of times where we've been down there. I mean, like here's the 10 line, right? And this dates back to 2018, right? Here's once, twice, 3 times, a little bit down here back in 2020. This is around COVID, and very few dips down to that level. So this is indeed extreme fear, right? A 6 is the lowest I think I've ever seen. This chart's kind of a pain in the ass, but that was back in June of 2022. 6s and 7s. And so here we are, right? We've had some pretty good dips here. Back in March, we got back down to the 10s. And then over the weekend, we hit 10 again. So I'm guessing tomorrow that after we close the day, that we're going to see extreme fear drop to an even lower number here today. And that doesn't necessarily mark the exact bottom, by the way. If you look at these dates next to a chart, it doesn't necessarily mark exact bottoms, but it gets us in a range where we're getting close. So now, what else is happening here, right? What are the signs that are positive? What are the signs that are negative? Well, depending on your bias, your version of positive might be different than somebody else's. But for our purposes, let's talk the bullish case. The bullish case is that extreme fear is getting down to extreme levels. We're up at a 14 today, 10 yesterday, and dare I say, tomorrow's candle is going to be in single digits, and that's bullish, in my opinion. The retest of support at the trend line and the yearly open, bullish, in my opinion. Now, obviously, we've wicked down below this now, right? But this is again, this is an open candle, right? We're not. This candle hasn't closed. We're on a daily time frame. If we look on the weekly, it doesn't look quite as nasty, right? This is our first dip below, and this is a candle that straddled both above and below the trend line. And so, if you're looking for hopium, your hopium is that this candle closes above the yearly open, if not today, by the weekly close. And even better if it closes above the trend line, right? And an even better scenario would be closing above the 50-week moving average. All right. So this was a bearish. This was losing the 50-week moving average was a bearish is a bearish sign. And we talked about this a little bit last week, right? We had wicked below the 50 last week, but recovered it, and everybody was excited about the recovery, and then things, continued to break down. And so we still have to watch this, okay? Because we have one, uh, you know, this candle body is both above and below the 50. So this one right here could still certainly on the weekly could certainly still go back and climb back above that 50, which is at 100 and like 102,000, almost 103,000. 102,782 on this exchange for whatever that's worth. Going to be slightly different on yours, but that's the range we're looking at. That gets us back into a comfortable zone, where this is a not so comfortable zone, below the trend line, below the yearly open. This is all bad. Yearly open at 93.3K. Price currently trading at 92K even on Bitcoin. And again, there's plenty of time to recover this before the close, which is about 3 hours away, on the daily time frame. And if you are trying to be patient, then you would wait for the weekly close. That said, if you have trades in profit that are longs in profit, I would highly suggest a trailing stop loss moved up into profit to protect that, and give yourself some room, but don't give it all back. And likewise, if you're in a long that is moving against you, you also need to have a stop loss in place, because if this thing breaks down more, I think it could go a lot further. I'll get into that here in a bit. So in terms of bearish signals, obviously closing below the weekly 50, the 50-week moving average, not a good deal for bulls. And this death cross, we talked about this last week. The 50 and the 200-day moving averages, this is classic death cross scenario. And each time this has happened, let me switch these back on for you. Each time this has happened since the beginning of time, well, at least the beginning of Bitcoin's time, it has led to the macro bottom. Okay, so this one hasn't played out yet. This one so far, we're right, we're not very scary yet. So each time this has happened over the last 15 years, since Bitcoin's inception, or genesis, I should say, in downtrends and bear markets, it has been drastic, right? It's been a confirmation of the bear, and the drawdown from those death crosses has taken us significantly lower, right? Back in 2018, it took us down 60%. In 2019, happened a couple of times, but notice, I want you to notice a big difference here. Okay. This is bear market, right? This was a confirmation of the bear. And we had 60% drawdown from here. That's not 60% from the all-time high. That's 60% from the death cross. From the all-time high, that was an 84% move. Okay, that was nasty. But in the uptrend, the drawdown is much less significant. Okay, 28%. Yeah, that's still a lot. 29%. So let's call it 25, 30%. That's still quite a bit, right? But it's a far cry from 65%. And so we had this occur not once but twice. The second one was triggered by the COVID crash. So I'm going to call this this one an anomaly. Okay, but this one right here, this was legit, and I think had we not had the COVID crash, then we might have actually been on a much better trajectory from here. This would have been a simple retest, and this would have gone from here up. Instead, we had this anomaly with COVID, another 30% down from there, and then up we went, had a beautiful ride all the way up to the what many consider to be the cycle top here in 2021. But then look what happened, right? We had another. This was a death cross between the red 50 and the purple 200, and it was a 20% correction down to support at a key timescape level. And from here, what happened? Boom, up to a new all-time high. So this kind of scenario could certainly be in force right now. This could be something similar to what we're seeing right now. Too early to know. Just know that this is a possibility, and this is the difference between this dynamic between the 50 and the 200, and it's the same with losing the 50-week moving average. Okay, same set of circumstances. It always historically has taken us to a bottom. Whether that was 5% away or 60% away remains to be seen. Okay, so big one here. We had a cycle top in 2021, 69K, and then we had, here it is. Here's that death cross between the red 50 and the purple 200, and price dropped 65% once again. And you've heard people say, if you have been on social media at all over the past year, you've heard people say, "Oh, Bitcoin can never go that low again." Bitcoin could go. There's no number that's off the table in either direction, quite frankly, for Bitcoin. It just, it's unlikely that we go back to 2019 levels, 2017 levels, but you can't rule anything out in this game. Not now, not ever. So we bottomed at the FTX crash, okay? And this was back in 2022, and then we started climbing our way out. And look at this. Okay, so this is the structure. This is the macro trend from the FTX crash in November of 2022. We had another death cross between that red 50 and that purple 200 here in September of 2023. Only 8.5% drawdown from there. And this was a consolidation zone, you could see. So we're uptrend, we're consolidating. It's a second retest of support, right? A double bottom, if you will, and boom, big leg up to the next consolidation range, which was in the 40 to 45K range. And we're off to the races. We get all the way up to what, 73.5K? And what happens? We have some more consolidation. And we have another death cross between that red 50 and that purple 200-day moving average. But we're in an uptrend. So, like the other uptrends, macro uptrends, I should say, 20% drawdown. And then up to the next leg, the next consolidation range, the next high, right? Now, at this point, we started making all-time highs once we broke this 2021 top at 69K. My deal is covering it here, but you can see the line. So 2021 top, 69K, and on to the next leg up. Boom, new all-time high. So in the grand scheme of things, we have been in a macro uptrend, right? All things have to come to an end at some point, right? So here we go with the death crosses here, and from the death cross, which is right here, we're now down. Where's my candle? Only 7.5% or so. Okay, so that's not in itself cause for panic. The breakdown of the macro trend line and the breakdown of the yearly open are not positive. Those are extremely bearish. However, we don't have candle closes here yet. So I would caution you to react to this just on the daily. You want to protect your profits, and you want to make sure that you have stop losses on anything that's in red right now. But this is a fantastic shakeout. If this doesn't develop into full bear market, and many may argue that it already has, I personally like to see those confirmations. And I told you what my validators are, right? We want to see weekly closes. below these levels to validate that that's happening. Okay, so that hasn't happened yet, and we've got a lot of time for that to develop. Couple of comments here. Let's see if I can grab a couple. Jason says, I think we actually form a bottom around 89.5 to 90.5. And what do you base that on, Jason? Well, I'm not arguing that or challenging that. I'm just questioning why you pick those levels. And it goes on to say, here's the 92K area you talked about last week. It just took longer to get there. Okay. So tell me why you like that 89.5 to 90.5. And we'll look at that and see if that, see if we can find anything to support that. Something that I'm looking at. Well, I'll wait to see what you come back with, and then I'll climb in on that. So you have the scenario now with how these all play out, and there's another guy on the X platform, prominent guy, big giant audience, and he posted something this morning that said every time this happens, it is a confirmation of a bear market. And I'm here to tell you that is not accurate, because I just showed you all of the examples where it didn't confirm a bear market. Sure, it was a downtrend, within a bull, within a bull market. And so there's a difference, in my opinion. This would be a bear market. This would be a bear market, and I'm pointing to prior cycle tops, and we just have not confirmed that yet. Now, obviously, and we talked about this last week, lots of discussion of whether the cycle has topped here at our all-time high at 126, and it may have. I had not been of that in that camp previously. I still have conviction that things could correct from here. Or let me rephrase that. We're in the correction now. Things could rally from here into 2026. I don't think we're going to see a new all-time high before the end of the year, and that may not be popular with a lot of people, but I don't think that that's in the cards for the year. And at this stage, I'm now questioning whether or not this is indeed the cycle top. Right? We're not confirmed yet. But like I said at the beginning, don't get married to your bias, because you will stay married all the way into the reckoning. And so that's something I've had to tell myself and discipline myself to say, okay, look at this objectively, look at the charts. Do the charts support what your bias is? And if they don't, then you need to think long and hard about what your bias is and what your strategy is going to be moving forward. So Jason saying, finally stepping in, usually you see a sweep, one or two lick levels below, then a real reversal. Are you saying, a real reversal attempt? Well, we'll see about that, right? So that doesn't tell me how you came up with the prior targets in that, would you say 90.5 range? I'm still looking. 89 to 90.5 range. So let me know what your thoughts are on that. I'm interested. Ralph asking, where should we go long? You should go long when buying begins and or resumes. Okay. And we're going to look at that here in a moment. This is a different Ralph. Do you think we'll have a dead cat bounce? And from where 91K doesn't seem to hold? I don't know that we're going to have a dead cat bounce. And I don't think that from the looks of things, we'll get a V-shaped recovery whenever we see the recovery. I think it's going to be a grind. And so let's move on through the analysis, because I'm getting getting caught up. So let's discuss some of the macro context behind this price action. And then we're going to look at targets too. I promise you, Ralph. Okay. It's because those are legit questions. So, and we'll look at targets and all of those things. Uh, a few forces at work here. As usual, um, we have uncertainty on multiple fronts. We have uncertainty on the economic outlook. We haven't seen economic reports, throughout the entire government shutdown. Now the shutdown is over, and reports are resuming this week. Um, so all eyes are going to be most especially on Thursday's reports. What's coming on Thursday? We have actually, I think tomorrow we actually have a little sneak peek at some employment data from what's today? Today's the 17th, right? Tomorrow we're going to see an ADP employment change. This might give us a glimpse of what's happening. Red Book will be interesting to see. And then on Wednesday, actually, Wednesday we have some FOMC minutes. That's not going to be a surprise. Like everybody gets excited about the minutes, and the minutes to me haven't ever really revealed anything or ground shaking, because they telegraph it in the speech after the meeting, and they telegraph it with the other um, uh, Fed members who give their respective speeches throughout, every week. Somebody else has something to say. So at the last meeting, Powell did say, don't expect that a cut in December is baked in. So it's not at this point. In fact, at this stage, I think only about, at least as of this morning, about 40% of the market felt like there would still be a rate cut in December. So that's here we go. Let's see if this has changed at all today. I'll bet it. I'll bet it maybe has 39.9 this morning. Okay, it's increasing a little bit. Why would it be increasing? Because there's fear that the economy's bad, right? So there's fear. Unemployment, spikes in unemployment are things that can likely fuel a rate cut. And while rate cuts are positive in terms of what they mean for the price of borrowing money and moving us from a risk off to a risk on phase, the reason for the rate cuts is not always bullish. Okay. So if the reason for the rate cut is a massive spike in unemployment, or a massive spike in inflation fears, or recession fears, then that's not bullish. So we have to see how things play out, but how this market reacts. There's a knee-jerk reaction to every data point that comes out. So we will be watching. And like I said, we're looking at this calendar here. Thursday, we have non-farm payrolls, unemployment. Those are the big ones that the market, that Fed watchers are going to be watching. Jobless claims also coming in. And then on Friday, nothing major on Friday that typically moves things. And then, of course, we have holidays, we have a monthly close, and then we get in the holiday season. And of course, we'll have more GDP data, we'll have more initial jobless claims, all of those things coming in. And then, of course, the new month starts and we get a whole fresh batch of data. Will be very interesting to see how things play out. So there's that aspect of it. December rate cut odds. Again, we just saw they've now moved up to 44%. They were below 40% this morning. And then the geopolitical uncertainty. We have tariffs still being negotiated and debated and even ruled in on court. I don't even know if they made a decision, but I know that the Supreme Court was looking at the legality of some of the tariffs that have been imposed. And I think we're still in a negotiating phase with China. And even if we're not in a negotiating phase with China, you can't really trust either side to honor any deal, because there's a fine line and everybody is edgy and looking for a reason to screw the other guy. And so those international tensions, not just with China, but all around the world. I mean, the president is bombing drug traffickers coming from South and Central America. I heard a comment today that he would have no problem bombing Mexico. Makes no sense. It's our next door neighbor, good trade partner. Yeah, okay. Um, so, the guy prefers chaos to clarity. He knows exactly what he's doing in terms of, he doesn't necessarily know exactly what he's doing with his job, but he knows exactly what he's doing in terms of creating chaos, grabbing more power. And, it's just a matter of time. His policies are, many of them are extreme. His decision-making process is erratic, and he tends to flip-flop or taco, if you will. Remember the analogy, taco, Trump always chickens out. That was popularized through all the trade deals, all the tariff deals that he walked back on. Um, Last week he was screaming that Dems were trying to deflect the shutdown by calling for the Epstein files again, and said it was a waste of time, and said any Republican that supported that was stupid, and ran on and blew a bunch of hot air. And then this week, he's all for releasing the Epstein files. Why? Because it came back in his face. That's why. And I'm sure he has some mechanisms in place to protect himself so that data that pertains to him and incriminates him probably is not going to be released, whereas he is now launching or asking to reopen the investigation or start a new investigation to investigate Democrats. Okay. There's no doubt in my mind that there are people on both sides of the aisle that are probably made some bad decisions and were involved with Jeffrey Epstein. But the fact remains, he waffled on that just like he waffles on everything else because it's making him look bad. So he'll continue to do that, right? And that's weighing on sentiment, and that's part of the reason for all of this downward pressure. Now, alongside of that, we spoke about this last week, where after, and this is part of the policy, by the way, and part of the problem with policy. Trump campaigned on a very crypto-friendly policy, right? And told us that there was going to be a Bitcoin reserve, told us no capital gains on Bitcoin and certain coins. And a lot of these policies have not actually turned into law yet. Very few of them have. One has, and that was the Genius Act. And the Genius Act, two bills went hand in hand, the Genius Act and the Clarity Act. Needless to say, the Genius Act, which really was centered around stablecoin legislation, has passed and been signed into law. The Clarity Act, something that everybody is waiting for, has not there yet. I don't think it's made it through the Senate yet. So, and I don't even know if it's on the schedule yet, but nonetheless, it hasn't occurred. And that Bitcoin reserve we were all promised, yeah, that hasn't materialized either. It's more talk about ideas and frameworks and plans to make a plan, but no actual plans coming into play. So there's that. Jose asking, what do I think about the OI going crazy in the last hours? More people longing our shorts. OI is going crazy in the last couple hours. I haven't looked at any of the data on some of those other platforms today, because I've been engaged in this, but it does not surprise me. People are trading both directions right now. And it's like one of the things that I said last week, and something that I was, leading into with this topic that I'm on right now, is this downward pressure, this downward momentum is playing right into the strategy of this next wave of institutional adoption. So that Genius Act paved the way for legacy finance, banks to start serving as custodians, to start transacting on the blockchain and to onboard clients. And so, and even to create their own stables. JP Morgan launched their own stable coin last week. So that group of institutions is slowly but surely working their way into the ecosystem. And you better believe that they want to load up when prices are low rather than when prices are high. So we have been seeing here, just in the order book, we have been seeing some large blocks of bids get bought. Now, we often have manipulation like we had here. This was just suppression, but we have seen some of these bids getting filled. We saw it here. We saw it here today. This was another 65 million. These got filled today, and so now we're continuing. The downward pressure continues here. And so some of these institutions are buying at these ranges. MicroStrategy bought recently. Tom Lee at FundStrat added more ETH to BitMine's treasury last week as well. And so, I wouldn't follow any of those guys blindly on their narratives, but it certainly speaks to their conviction, and it certainly quells some of the noise we heard last week about how much those guys had to be sweating because price was going down. Those guys are in it for the long haul. They are not trading. They are accumulating with a dollar cost averaging strategy, and they're finding these key levels to do it at. And so that is a tried and true method. And it takes a lot of stress out of trying to snipe absolute bottoms and absolute tops. You find the key levels that you're interested in, or you do it on a time based interval, and you average your entries and you average your exits. So there's that. So those guys have conviction that price will ultimately go up, and I do too, right? It's just a matter of how long is it going to take. Is the bull market over, and are we going to have to wait a matter of days, weeks, or well, if the bull market's over, it's going to be more than days and weeks. But if the bull market's not over, do we just wait days or weeks and then we see a recovery, or do we have a full bear in control, and it could be months or a year or more, right? It could be 3 months, 6 months, 18 months, who knows, right? So and because the manipulator in chief is probably going to be sweating if he starts catching more heat and the market goes down, there's no doubt in my mind he'll do something and say something to try and prop the market back up. Last week, one of his knucklehead sons was saying, "Oh, buy Bitcoin, buy Bitcoin, buy Bitcoin, buy now, buy now, buy now." Don't listen to those guys. Do not listen to them. Look at the charts. Don't take my word for it. Make your own decisions, but don't listen to those guys. They are making billions of dollars off of you, and they do not care if you get wrecked. Your loss is their gain. So do not follow them into the pain cave. So it's so correlated with S&P these days. Well, we can look at that. We can look at the correlation amongst the different indexes, and everybody's feeling the pain right now. And that is largely because of all of the uncertainty I just told you about. And one guy is responsible. One guy could change it all. But again, he likes chaos better than clarity. What is my opinion on Tom Lee predicting 7K ETH by the end of the year? Well, gosh, I hadn't heard 7K. I heard 15K. And so did he revise downward? I would say this. I think Tom Lee is a brilliant guy. Tom Lee was the first TradFi legacy finance guy to start recommending Bitcoin years ago. Okay. He has always been on the leading edge. And he's got a great track record. But know this, at this stage, he has a vested interest in attracting as many people into ETH as he possibly can. And that is, I've raised this question before of whether his conviction is outshining his hype at this point, right? Did he transition into a hype man when he took this job? Or does he really feel that these numbers are possible? Now, I feel that whether it's 7K or 15K, or 25K, I feel that those numbers are achievable for ETH sometime in the future. By the end of the year, I don't know. Um, Tall order, to be honest with you. I mean, there has to be just a tremendous, tremendous change of sentiment, or something fundamental that changes that corrects this. And let's take a look at ETH really quick, because the ETH chart is a little bit different than the Bitcoin chart these days. Okay, and I want to show you exactly what I'm talking about here, and this is also why I've um, felt like Bitcoin wasn't going to make a new all-time high before the end of the year, and I don't necessarily have the same um, conviction for ETH. Okay, so you see these arrows here. This is trend precognition. I have an algo up here, the A2 plus algo with the arrows, and down here we also have an algo with the A1, and with the A1 algo. And so if we look at higher time frames, we have on the monthly, right? Downtrend after the high, followed by another one back to back between both algos, and we're obviously seeing that develop right here. But let's look at the 3-month. 3-month does not have that, at least not on that time frame. We do have one. Looks like we do actually have a down signal on the A1 algo. I'm not sure that this appeared at the beginning of the quarter. I don't think this did, because I don't remember seeing this before. If somebody has seen it, one of our members, please correct me. But as far as A2 plus signals, haven't seen it. So it's obviously losing strength right now, no question about that. And we just cracked below 3K. So it would take a lot. Now, in terms of structurally, in terms of like death crosses and things like that, on the monthly, you see all the moving averages looking pretty good here. On the weekly, we have the green 21, the red 50, the blue 100, and here's the purple 200 down here. Hard to see, but it's there. It looks like we have an imminent death cross between the red 50 and the blue 100 in the next week or two, depending on how this price action goes. So that would obviously signal more downward momentum. Even though these are lagging indicators, the market tends to continue with that just a little bit. Yeah, I think that's a tall order. And not that I don't like Tom Lee, but like I said at the beginning of this, don't follow these guys blindly. Okay. Now, if you have conviction that ETH is going to be part of the new financial system, and I think it is. I mean, obviously, everything that's being built right now is on ETH. All the settlement is being built on ETH. All the fees are ETH. So there's a good case for ETH's future. But you might just want to stake it for a while, because 7K by the end of the year, not impossible. Nothing is impossible. But what is going to be the catalyst that reverses the whole market? Because it's not going to be just it's not just ETH that would be making that run. Everything else would run with it, right? At least Bitcoin would. Alts, on the other hand, I have no conviction in alts whatsoever beyond ETH. Even Solana, which I think had some promise, I think that one's fading too. And so, if you're staking these coins, you may be holding them for a long time until you're back into profit. But it's not the same game as it used to be. Let me see if I have this other chart open really quick. Let's get a refresh on that guy. This is one of my favorite charts to watch. Look at this. Wow. This is total risk off right here. Bitcoin dominance declining. I mean, it's still up at 59.5, but Bitcoin dominance declining, total 3 declining, ETH declining, and stablecoin dominance like straight line ripping. So this is a signal of risk off, risk off, risk off. And if anybody knows of any catalyst today, any news today that um, might have triggered this, by all means, please let me know. Um, Ralph says Bitcoin dominance is going to go down hard. So here's the thing, Ralph. I don't think it's going to go down that hard, to be honest with you. I think that Bitcoin dominance is holding pretty damn strong, all things considered. And the reason for that is long-term investors. I'm not talking about traders. I'm talking long-term investors are holding onto Bitcoin, and they're treating it like a savings account. And so Bitcoin dominance is not dropping like one would think. Like I said, it's still at 59.5. That's pretty freaking high in my eyes. Total 3. That's going to drop hard, in my opinion. ETH, for whatever reason, people rotate out of ETH a lot faster than they do Bitcoin. Like I said, Bitcoin is treated like a savings account, and ETH, for whatever reason, I think I read something today that 25% of ETH is locked up in staking, but the rest is changing hands pretty regularly. So there's that. Johnny Dreamwalker. Hey, Johnny Dreamwalker. Holy bear crap, how low can we go? Oh, that is the dreaded question, right? How low can we go? And listen, like I said towards the beginning of this, there's no level off the table, right? I mean, there have been no shortage of people saying over the past year or more that, oh, Bitcoin will never go below 50 again. It'll never go below 75 again. It'll never go below 100 again. There's no level that it couldn't revisit. I think there's a very low probability that it goes, that it goes back to, 2017 or 2019 levels. I think there's a very low probability that we get back to the, like 20K level. But let's just take a look at what actually looks like a legitimate target from here. Okay. And I think I got to clean some of this up so we can actually see the chart. I got so much going on here. I apologize for that, guys. Let me just hide some of the noise. Bear with me. I think that, what I'm looking at from here, there's a couple of things that I look at in terms of identifying those targets. Technical, basic technical analysis, timescape levels. These timescape levels, if you're not familiar with them, you want to be. This is actually our most recent indicator, material indicators, and it simply marks quarterly opens, yearly opens, quarterly opens, and the first week of those. I mean, technically, a yearly open is a quarterly open. It's Q1, but it marks the first week of those as well. And those levels seem to have some real bearing on where price goes, like a magnet. Okay, they serve as resistance and support time and time again. And so you can see we've broken down here from the yearly open, and price is going. So what's the next? What are the next technical levels? Because the structure is gone here, right? Here's the macro trend line. We've broken that. If price cannot recover this, and we see a further breakdown, yes, you could point to the moving averages and go, oh well, here's the 100-week moving average. That might be it, and it might. But I would say that these timescape levels would be stronger, and you can't see it here on this time frame because it happened in like a week's time. So let me go to the daily here for a second. We had a double bottom here at like 74 and change. What was it? 70, we'll call it 74.5K. And so this would be the lower low. I could see price working down. We had good consolidation here above this Q2 timescape level, so it could be anywhere in this range, right? We could conceivably stop here where we consolidated around 82K. But what we want to see here to identify a recovery is, does Bitcoin make lower lows or higher lows? And you can see we're now in a lower low scenario. Our prior low from where we are right now was the last support test of that January timescape, that Q1 timescape at the at the 98 level. And now we've come through the prior low to that, which is the yearly open at 93.3 level. And so what's the next lower low? The next lower low is right here at this 74.5K level. So if we get down this low, then you see another timescape level here, which is from 2024. But we had some consolidation in this range, and the most important one to me is the yearly open. I mean the 2021 top, excuse me, at 69K. We had a lot of consolidation here. We had a hard time breaking out of here. And so this to me is the strongest support level, strongest technical support level on the chart would be here. So it could be anywhere in this range. Any of these levels could be the one that the price bounces from. Best case scenario, the most bullish case scenario would be to make a higher low. Okay, so that means we don't go lower than this 74.5 level. That is well, let me rephrase that. That would be the second most bullish case. The most bullish case would be we climb out of this somehow and grind our way back up. It ain't looking like that right now, but again, that could change by the end of the week. So this is what I'm preparing for, and this is why I'm sliding my stop losses up. Remember, if you've been with me for a while, you know that I started building my position dollar cost averaging from right here at the FTX crash. So I'm in profit. Sure, I've given some back since the all-time high, just like anybody else has, but I took some profit yesterday and today because I want to A, protect that, B, have some powder ready for where we find support. And so that's what I'm looking at. Imagine going back and retesting the 69K level. Don't rule it out. And could we go lower from there? I've heard some arguments to go much lower, and I would say, again, I don't rule anything out. Our prior consolidation was in the 40 to 45K level. And you see this 45K level has a lot of confluence with a lot of other timescape levels. So I would say this would be very, very strong as well. So you're really looking at the lower lows, and you can find this. Anybody who has a chart can find this, right? You can find it here. You can find it here. You can find it down here. These are the levels that you need to be watching. And I would say that if we see a bigger breakdown and 69K doesn't hold, then I would seriously be looking in this 40, 45 range. Scary to think about if you're a bull. No question about it. What do I think about 82.5? 82.5 would be nice, but what are the technicals around 82.5? We had some consolidation at 80, around 86. That support level was down here at 74.5, we said. So 82.5, let's see. Do I have a timescape? That's 78. This one is okay. We do have a timescape at 82.5. So that would be the Q2 timescape level. So yeah, there's some validity to that, and you can see where we had some consolidation at that level. So yes, that's a valid target. We'll see if it holds. And that would be also, by the way, Ralph, that would be a higher low. So that would be, in my opinion, a um, a, a good, comfortable place to bounce from. I just don't know if it will happen. And the reason I don't know if it will happen is because at the moment we just we don't we don't have a ton of liquidity below us. We do have a little bit above that 80K level. We have a little bit here at that 82 level that could support that up to 82.5 right here, right? So at the moment, there is a little bit of bid support in that area. Now, we don't have anything substantial below that, but price has a way of how should I say um, inspiring some liquidity movement. So we'll be keeping an eye on that. That's something we'll be watching. That was a valid question and a valid target, Ralph. Appreciate it. Um, so I think that's most of what I wanted to get through. Oh, order flow, obviously something else we wanted to watch. Somebody said, when do we buy? So you want to look at these levels. That's part of it, but you also want to look at the order flow and figure out when the buying has resumed. Now we can see here on fire charts that we have some divergence between what's happening with the order classes. Brown mega whales had been buying. Um, the past week, there's been a lot of buying from this smaller order class. And let me again remind you guys, even though it's the smallest order class on the chart, it is not necessarily all retail. Retail certainly lives in here, but whales can disguise themselves in any of the smaller order classes. And you better believe that they are T-whopping in, that's a time-weighted average price. It's a DCA strategy. And they're doing that with this smaller order class trading against the trend. So keep that in mind as well. So this is one place you can watch it. And the other place you can watch it is on ETFs. Now, ETFs, I don't say that they are the smart money. And again, they don't get to trade 24/7. They don't have weekends. They don't have after hours. They are missing some timing, right? So they don't have the advantage. These are not the guys who necessarily time it right. They're often a day or two late or a day or two. But you can see that through the past several weeks, there's been a lot of red. There's been a lot of outflows. So that sentiment, whether it's smart money or not, that sentiment certainly is permeating through the market. If there were any to watch out of this group of ETFs of who's early, and don't be fooled into thinking that the institutions themselves are dumping on you or buying on you um, or trading against you. They're executing orders that their customers place. Now, their customers have financial advisors, and so I'm sure they're advising. Um, BlackRock seems to have the best timing from what I've seen amongst all of the other entities. So if you're watching any of them, or if you wanted to watch one in particular, I'd be watching BlackRock. Um, they tend to get the timing better than the rest of them. So there's that. So you're watching essentially for these flows to go back to green, because it's been a lot of red. There's been a couple of positive days in there, but for the most part, lots of red, lots of red. Same thing on ETH. Red, 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 red. One small day of green on November 6th, and then back to red. So you're looking for this bias to change. You're looking for this sentiment to change. Those are signs that not just that price is bouncing, but that traders are coming back in. And so that's how you monitor. Those are good ways to monitor the order flow. Let me just check my notes, see if I had anything else. So bottom line, what are we watching? I told you all the levels that we need to watch. You're going to watch the order flow. Obviously, you're going to watch the liquidity in the order book and see where it's moving, right? When price, so we can see this very, very clearly in fire charts. And just to dumb this down and make it as simple as I possibly can. When price, so liquidity, you can see here on the left-hand side, liquidity is represented here on the left-hand side. The brighter spots represent more liquidity. That's taking a long time to load. Let's do this. All right. So the brighter spots in the chart represent the most liquidity. And you see how price actually tends to oftentimes get pushed away from that. Look, big block of bids shows up, price goes up. Big block of bids shows up, price goes up. And then a big block of bids shows up and knocks it back down. So as you can see just below us, we do have a better concentration of bid liquidity than we have up above us. It's kind of spread out here. But you want to see this get much, much bigger. You want to see, like, in this range, 150, 200 million plus in this range. And that may not sound like a lot of liquidity to you, but it's what it takes to move the market in a macro direction. So look for bigger concentrations of bid liquidity and be mindful of the occasions where manipulation is happening and somebody's pushing it down, right? These guys never had any intention of getting filled. They wanted to push price down into bids, and they did that. And so, yeah, we have a little bit of bid support here, this 90K level, but not as much as I'd like to see to give me any level of comfort. So you're watching that, and you're watching those key levels we talked about in the charts. We're watching the 50-week moving average. We're looking to see if we can get a close above this. Obviously, to get there, we have to get a close. So the near things to look at are reclaiming the yearly open at 93.3. Price is currently trading at 91.7K. So that's the first thing you want to see. Recover the yearly open, recover the trend line, recover the 50-week moving average, and then we're comfortable. And even if we get above this, we're not comfortable until we get above, well, quite frankly, all of these. But from here, you got it. That's the start. And then on the down, to the downside, all these other points are going to be temporary until we find that support level. So will it be what we just discussed? Will it be like what Ralph suggested? Will we be in that 82 range? Will we be in that 74, 75 range? Or are we going to see a bigger breakdown down towards the 21 top at 69K? I've given you guys a lot to marinate on today. I hope it's been valuable for you. I hope it is helping you trade smarter. And the thing I want you to take anything from this is do not let any of what I shared with you simply fuel your own bias. Make a plan for when price moves in the other direction, when price moves against you, and make that plan today so you don't have to make it when it's happening. Trust me when I tell you this. You might get closed out and be pissed about that, whether it meant you closed early and you didn't get as much profit as you thought, or you ended up taking a stop loss and then price recovered. You're going to take the anxiety and the stress out of your trading if you will make these decisions when you open that trade. And if you haven't made that decision when you open that trade, make that decision today of what you're going to do with each of these trades if price hits a certain level. And if you're trading alts in this environment, or anything in that for that matter, until we get any confirmations, be very conservative on your profits. Take them. This is freaking take the money and run season. Hit them and quit them. All right. Going to leave it right there, guys. Hope you navigate this safely. Hope it helps you trade smarter. Hope you have a profitable week.